What's up? This is Latorian Paul, the mentor, and I got some banger information. A lot of times we make the stuff more complicated than what it really is. Today I'm going to cover two things: bearish convergence and bullish divergence. Now, what's the significance of these two terms? These two terms help to see what is hidden. These two terms are the result of price and momentum coming together. What you'll need is what you see on my chart. You need the TDI set with the RSI at 14 period, and you need, you know, price action. Okay. I like to use two moving averages. That's just for me. That's my preference. It works for me. All right. Help me to see higher highs and higher lows, which we need in order to determine market structure. Um, you are what you eat. So however you trade, keep doing it that way, but you have to build on it. You don't want to keep starting over from scratch. So if what you see is a lot different from what you have as far as the price action side, then you may want to just, add the TDI. TDI helps to see the bearish convergence and the bullish divergence. Convergence, divergence. They're just big fancy words that shows direction. Convergence, to converge means to come together. To diverge means to go away. All right. But what's those words are not at the point of focus. Bearish means going down. So convergence is a situation, a perspective, but the bearish is the overall direction of that move. Bullish is the direction of the divergence. The divergence is seen to kind of give you a heads up as to which way to go. Now, you will never have uh, these terms are mainly for continuation and trend change. Okay, so first I want to cover bearish convergence. Let me go find some bearish convergences for y'all. And these, I'm only looking for these things that happen at points of interest, higher highs and higher lows, breaks of structure, continuation situations. Okay, so let me see if I can find a good bearish convergence real quick. I'm going to hide my floating media controls, and I'm gonna go to a bigger time frame. All right, here's one. Let me just say here. So first of all, you have to notice uh, a breakup structure, and then a retest of that breakup structure. All right, so I got this, and I'm gonna change this to blue. I meant to change this to blue. Uh, Objects, let's go to here, edit. I meant to change this to blue because I have a lot of red on here, so just some colors to stand out. All right, so go all the way across, right? And at that same point in time, now mind you, here's the most important part of this process. When you're looking for bearish convergence or bullish divergence, in this case, bearish convergence, you have to make sure that you're marking price action and the TDI at the same points. So if I mark at the bottom of the candle right here, I have to mark at the bottom of the RSI here. If I mark at the top of the candles here, then I have to mark at the top of the RSI here. So watch this. Watch what happens. Right? I'm gonna go straight on down, grab the bottom, and I'm gonna go over here. Okay. Now, what do you see? These 2 points are coming together. Bearish convergence. Why is it bearish? Because the overall move is still to the downside. Okay. Don't confuse the coming together for a push up. No, that's not what I'm saying. I'm saying bearish convergence. Why is it bearish? Because bearish speaks of the trend that it's already in. I wouldn't call this a bullish convergence because the trend, since price broke this point right here, since price broke 43,061-ish, 43,000 just some change, the trend was down. So it's bearish convergence. Price pulls back up to this point and it sells back down. Okay, real simple stuff. I'm going to go to my favorite, which is gold, and show you some stuff on that. All right, and this is crazy because I've been doing very, very well. And my mind, well, God hadn't revealed to me this point, and I have been doing it the whole time. Didn't even know that I could. Well, I hadn't been doing it. Forgive me. I had been doing it. I've been working on just trading market structure, but I've been missing key points. But God has given me this to solidify what I've been doing to the point where, like, I got to trade in. I'm in a buy still on gold on my real account. And watch. Let me just show you them. Let me just show you something, right? Just with this on the H1. Watch this. Even with my trade, I got a standardized trade on gold, right? And I was buying because simply because of the retest of this higher high. So this higher high turned to a higher low. I was just buying off that. Didn't even see the fact that it was bullish divergence. So bullish divergence is when you're in an uptrend. Price action comes to a previous, it may look straight across, right? Higher highs, higher lows. I get that. But the momentum is showing you this. Bullish divergence. Why is it bullish divergence? Because from the beginning of both of these, from here to here and from here to there, at the ends from left to right, the lines separate. But ultimately they separate in order to do this and to come back to either this high or higher. So I'm excited to see what the opening of the day will be on the day after Christmas. I'm looking for a major gap to the upside, and I look to be blessed by this trade because of my positioning. All right. So bullish divergence. Let me just show you something else. This is gonna blow you away. It is the most underrated, one of the most underrated points of perspectives that's not talked about. It's not taught about. We teach, a lot of people teach indicators, but the indicator is only as good as the one that's using it. A lot of times we put a lot of emphasis on indicators and not on principles of trading that don't change regardless of what indicator you use, regardless of what moving average you use. These things will not trade. And the most important thing that will not change as far as trading is market structure. Without market structure, there's no trading. Without higher highs and higher lows, none of the other stuff would matter. Let me get off that and get back to this. Now watch this. Watch this, right? We on the H1. We got a high. Let's go straight across, right? Even if it don't come down to this point, even if it doesn't retest to this point, if you just draw from this point over to the first one, it's still bullish divergence. Even here, if you got in here, did it come back and retest? No, it didn't. But is it still going up? Yes, it is. So knowing this, right? Even with this second leg of the W, you would have made a major move by just having the right perspective. This one, you could have taken this trade, or you could have, taken this trade and let it go. Come back on Sunday, Monday, which is that December 4th, and been up over 1,000 pips off one trade. Now, did you know it was going to happen? No. But it happened. The thing I love about Forex trading period is that you don't have to know. All you have to do is be in the right position so that when you're waiting and seeing, it pays off. The worst thing that's why you can't really go off the higher, the double top and double. No. Because if you went off the double top, you'd have got dropped. Here's a double top, triple top. You would have got dropped. You ignored all the signs because you're focusing on, it's double top. No, it's not. It's not. Market structure is not like that. No. Higher highs and higher lows. Not double tops and double bottoms. That's good. But that's a range trading terminology. You want trending only. Trends last longer than ranges. Trade trends only. All right, now let me keep on going. I'm talking about divergences, so I'm gonna find another bullish divergence, and it's gonna make so much sense. All right, watch this. We got a high. Here's another one. This is a trend changing situation when you have a higher. So this was first this came down, gave you a lower high. Lower high turned into a higher low. Lower high turned into a higher low. Okay, let's see what this gonna give us. All right, now go right here and come here. All right, now this is the move. The move that puts you into the trend it will be a bullish convergence. And bullish convergence is when lower highs turn to higher lows. Okay, lower lower highs, because it had before the trend changed, it was a lower high turned into higher lows. Okay, and you may get one of those before the trend goes. All right, that is bullish convergence. Why is it bullish convergence? Because it changed. It's the heads up. Okay, lower highs become higher lows, and then you enter into the new trend. Then it goes from bullish convergence to bearish convergence, the bullish convergence to bullish divergence. All right, so it comes together. Bullish convergence goes to bullish divergence. So bullish convergence is the trend change entry. Bullish divergence are the continuation trades within the trend. All right, let me get you the other side. We're going to talk about the bearish divergence, because these things are important to understand what to look for even in the midst of what you see. All right, so let's find a bearish divergence. Let's see if we can find one. All right, a bearish divergence would be when a higher low turns into a lower high. All right, let me see if I can get you a good one. Let me get a good one. All right, a higher low turns to a lower high. Bang, right there. All right, so watch this. Higher low turn into lower high, and that turned into drop. All right, so on the bearish side, you have, let me grab these points. You're gonna get from the low, all right, and you're gonna go right there. Let me go right there. That's where it began. All right, and you can't really see it. You can't really see it that much, but from here to here, it's separated. All right, and then if you go from that same point to the next day, it goes to bearish convergence to drop. So from bearish divergence, they separated from this point to this point, went a little bit away, and then that very next day goes into the beginning of bearish divergence. The overall trend is bearish, but if you look at these points in time, the highs, so you see I got the top of the RSI. Wherever you mark in price, you have to mark that same point on the TDI. So if you mark the top of price, you need to mark the top of that same location of the RSI. If you mark the bottom of price, you got to mark the bottom of the RSI. All right, RSI represents the price action. RSI represents the candlesticks on the TDI. All right, so let me keep on going what I was doing. So we back into the bearish convergence. All right, and when I'm looking for these places at key points of entry, which would be the lower lows, I want to see convergence. So if I stretch this all the way across from this lower low, and I grab this same point in time, which would be right here, and I go to the day, I want to see price. I want to see these two lines coming together, and that'll make my entry cold. Boom, straight to the bottom. Here's even another one. Watch this. Even with all the extra stuff, even with all the pullback, is this still a good trade? Yes. Why? Bearish convergence. We in it. Go straight down, hit the low, grab the bottom, go to the top. They coming together. Oh, that's a nasty one. Boom, straight down to the downside. Then we get this range. We got nothing but range. All right. Now, how do we know what to do in the range? The range is showing us higher highs and higher lows, but price is showing us a range. All right. Now watch this. We're gonna go straight across. Right? And then we're gonna go straight across. What is this? This is the bullish convergence that we talked about. Even with all these 4 days of range, every day was bullish convergence. Every single day. We didn't have any breaks. We didn't have any breaks in price until the 4th day. But if you bought at any one of these lows, it was the bullish convergence. Bullish convergence is the beginning of the trend change after the trend change, we go into bullish divergence. Okay, we got the high, right, and then actually pushed up to here. So we got this high and got this low. So if we go from here across, boom, what is that? From here to there, bullish divergence. All right, let's go to the next high, straight across. What we got? From here to there, bullish divergence, boom. All right, next high will be here. Even though it didn't come down, is it still bullish divergence? Yes. Boom. Next high, straight across. All right, from here to here. Is it still bullish divergence? Yes. Why? Because it's going up. Next high. We got this high, just a little bit. It pulled back a little bit. Came across here. Same place and time. It's a high to the low. Bullish divergence. Next high. All right, now we got into a little range. All right, so from here to here, still bullish divergence. All right, then we get into this range. All right, we're gonna look at the high. We're only looking at the highs, and then it actually comes down because we're gonna keep it straight across. Keep it straight across. So we got 1, 2, 3 pushes to the top side. It ranged for a long time. Long time. So, I mean, but even then, you got to look at the trades. These trades, you'd have made bank just by knowing bullish divergence, bearish convergence, or whatever is higher highs and higher lows. And the actual point of the respective helps you to see what's going on. And this is the quote unquote volatile trading, right? Now, the other thing that you got to work on is risk management. But if you get that together, knowing what trades to take, you're good to go. You do it, but with this information, this removes the need to be greedy because you know it's only a matter of time. It actually speeds up your growth process when you know what to look for. When you know what to look for, it removes doubt. It removes double-mindedness. It removes, I don't know, no. This is how you figure it out. All right, you got a high here. It goes across. Okay, you had a little range. You have some ranges in here. But if you grab from this point, which is a high, and you go to here, right? It wasn't that much of a move, but it was a move. You had this one for 90 pips, and then you had another retest to the top for that. Okay. Now you had a higher high, a broke structure again. Okay, it gave you a high, higher high, and then it broke structure at this point right here, broke it, came back to it. So even in this little situation here, right? Let me just grab this and clean it up a little bit. Pull this away from it, bring it back to about there, bring you over here. This, it broke a higher low, turned into a lower high. Let's see what we get. Go from the bottom, go to the top. That is higher low to lower high. That's bearish convergence. Bearish convergence, higher high. Why is it bearish? Because it ended up dropping. Why is it convergence? Because from left to right, these the ends from left to right come closer together. Hold on 1 second. Let me see what's going on. All right. So let me do this again. All right, now let's do this. So look at this too. That really will help a lot of us see things that we don't normally understand because we haven't been exposed to them. But this was a low. This was a lower high. So if I grab this and come across to here, that is bearish convergence. So you got to be able to see what's being given. Take that, go from there. Honestly, straight across. Okay, so even look at the smaller moves. This and this, even though this was it looks insignificant, but this was a high. It came down, gave you a lower high, a higher low. So even with that, that's how you got the pushback to the upside. None of this stuff just happens by circumstance or by manipulation as we think. It's all has a structure. It has a structure. So let's just go. Oh, I can't adjust that. So what I'm gonna do is go to November 1st on a 15-minute chart, if it allows me to, depending on how far I went back. November 1st, what we got? Now look at this. All right, so we have two times give you a low, lower high, higher low, boom, came back and gave you the same point twice. So if you look at this, and we're gonna do what we did, we grabbed up. So this is at a high, which right here. This is at a low, right? So let's go right here. What is that? That's bullish divergence. And what do you get? Price shoots up back to this point, which on the bigger time frame was bearish convergence. And for the drop, it's so simple, so simple. Even when price gets broke and you don't see it, but it's there. You had a real quick retest and then it dropped real quick. So now we in a bearish market, so we should be looking for bearish convergences for continuations, right? So that comes down to here, and then that goes to, even if it came to here, because it gave us that. But this is where you should have been looking to enter in for a continuation trade. This would have been seen on the smaller time frame. All right, you would have seen that, but on the time frame you're on, you would have been looking to get in to continue to sell right there, and you got that, just that. All right, then he does it again, gives us a low, goes straight across. Actually, you have plenty of lows, but this is the one we want to look at. If the first low you had was here, that was the first low, and look at where they come back to. That little move gave you that first shark fin out of the water and back inside the top of the red, back out. All right. Now, if you missed that and you wanted to wait till it got here, it did work out. Either way, either one, it worked out. It still gave you the same thing. Whether you went from here to there, which is still bearish convergence, or you went from here to here, it's still bearish convergence, which means it's going to continue to drop. Okay, let's go to some more bullish stuff, because I did touch on that. I didn't go, too far into detail, but even this is a high. Let's go to just look at right there, right? Even though it didn't come to this point, did we still get bullish divergence? Yes, we did. Very simple. Let's go right here, straight across. All right, that went a little further, right? So this gave you that, pushed up past this point. All right, and even though, especially with gold, it tends to come a little bit further down. As long as your risk management is good, as long as you're not doing no crazy trades, you're straight. What my risk management, what I do is I risk 30% of my account, and in that 30%, I divide into that to find my lot size. All right, that's all I'm doing. All right, actually, forgive me. I divide my capital by 200, and then whatever that is, I let my risk tolerance be 30%. So if my capital is 100 or 1,000, I divide that by 200 to find my lot size. My lot size would be a 0.5, and then as far as my risk, I will risk 30%, which is 300. 300. That would be so it'll be a 0.5 with a 60 pip stop loss. Real simple. Really, really simple. All right. Now, here's a cool thing. So with this, the first time it comes, it would be here. All right. So this to here, that's bullish divergence. It gives you this trade back up to this point, right? So if you look at this point and this point, from here to here, all right, that will be bearish divergence. Even though it's quick, it's trading against a trend, it still counts as a retest of it because it broke structure, even if it for a little while. It broke this support, turned it into resistance, and that could have been a trade back to this point, right? So, or whenever, because it broke through this point, but you know that the overall move is still up. The overall move is still up. So if it broke here and came down to here, it came down to this right here. Just a high, turned it to a lower high, a higher low, forgive me. So if you look at this, which is this, and this, it's still bullish divergence. So he's looking at this is how quick things can change. All right, really quick, just by having the right perspective. So I like to do my numbers. So let's take that same 1,000, and it don't matter how much the money is, it's the principle. The principles don't change. As you can see, I've done some very cool stuff with little bits of money, but ultimately what got me to where I am is the principle. The principles pushed me past the norm because I didn't let what was being said become a standard. I set my own standards based on what I knew. All right, so if you're looking at this, the first entry right there, back up to this point, that's 90 pips. Now remember, I said with the $1,000, my lot size would be a 0.5, which is $5 a pip. So 5 at 90, that's 450. My account is at $1,450. So what I would do, divide that by 200, get my new lot size. I just keep it as a whole number, 7. Okay, I'm risking $520, and I'm selling. If my take profit 1 is here, if we go past this, I know my take profit 2 is here. So I get out right there. That's 150 pips at 7 times $7. That's $1,050. New account balance is 2,500. Divide that by 2, it'll be 12 and a half, and I'm gonna keep it at 12, and I'm risking $750. Okay, now I know that I'm looking for it to go at least to here, in which it does that. So I'm buy here, and my take profit is there. So from there, that's 250. All right. Let me see something real quick. 1 second. 1 second, y'all. So if we do 12 times 250, that's 3,000. So that's 3,000 in profit. My account is at 5,500 just with these 3 trades. That's just in those 3 trades in one day. One day I made 4,000. And let's just go, because this is how quick it goes when you know what to look for. Now watch this. Price breaks this high, so I'll grab my easy stuff, pull it over, and I'm look. I know it's a higher high, retest of a higher low, but let me see if I get any consistency. So I got this to here. All right, that's straight across. Did it come closer? It's bullish. It's definitely bullish. Got a higher high, higher low. All right, so I'm buying that. That's common sense. That's not even. And then you got the baseline pointing up. That's common sense. I'm buying that. So my account size is at 5,500 divided by 200, 25. So I'm gonna take it to 30 because I know I got a higher low. All right, not knowing how high to go, so I know it got to go past this high in order for it to be. So I'll place my trade. Once the price breaks up here, I put my stop and profit, and then by the end of the day, I see where I'm at. So it goes to here. Once it hit that 200, that's very good. So I made more in one trade than my previous account balance. So that's 6,000. 6,000 plus 5,500 is 11.5. All right. Now that's the trade for today. That's it. But it broke a higher high. It broke a higher high. So let me just draw this straight across. Higher high turns into higher low in an uptrend. But what do I need to see? I need to see bullish divergence. And I get that. All right. Higher high to higher low. Okay. So I get that. Comes up to here. And then it drops. Why did it drop? Because I have bearish. It was divergence. I mean, it was bearish divergence. If we look from this point, from here to here, that's price is going up, but my momentum is slowing down. That's divergence. But what side? Bearish side. Even though it's temporary, it is definitely temporary because price dropped. All right, so I get my account is at 11,500. Okay, so my lot size is 50, and I'm risking 3 grand. I'm getting out at this high, ultimately to sell again. So 2 trades for this day. So that's, just call it 80. So $50 a pip at 80 pips is 4,000. New account balance is 15,500. New lot size is 75, so I turn it into 80. Keep it a whole number, make it easier for myself. All right, 80, and it sells, and I'm getting out at the low. So that's 200. So I'm 16,000. New account balance is 31,500. All right, now you see how quick these numbers are adding up. It don't seem real, but I'm telling you, it's real. When you could turn $24.74 to 5 figures in 2 weeks, how do you think it's possible? Because it's knowing what to look for. It sounds easy, and you may not get it instantly. It took me a long time to see it. I see it now. All right, now what do I get at the end of the day? We're still in the uptrend. This push down was temporary. So did we get a retest of a high? Did we get any type of retest of anything? Yeah, we got this low, which went, it was a higher low, went straight across. But if we go to the same points in time, this higher low went to this, which is bullish divergence, and then we get the crazy move to the upside. What would be the reasoning for this? Why would I take this trade? Well, it's still a higher low. Okay, where would I put my take profit? At least to here. So if I'm at 31,500, my next trade size will be $150 a pip. $150 a pip, and it blew past that. It blew all the way past that TP. So if I set it to 200 pips, that's another 30 grand. New account balance is 61,500. Nothing I'm saying is nothing I'm saying is mystery. Is a mystery. All right, 61,500. We get a break-in structure. So we go straight across and see if we can get any more bullish divergence. All we care about is bullish divergence on the TDI with the TDI and price action, but it's based off of break-in structure and retest. All right, so from here, let's grab it where it was. From here to here, that's bullish divergence. That's all I need to see. So if I see this, and I'm already at 61,500 divided by 200, my lot size is 300, and I'm risking 30%. So that makes it at what's 30% of 16? 1, 2 times 0.3. So I'm risking 18,000. My pips. So I'm taking a 60 pip window. I'm trading at 300 pips, $300 a pip, and because it's going, I'm just gonna let it go. All right, so I'm here. It gives us this high. Give me this high. I get a small higher low, but then I get that. So honestly, I could have got out at that. You just call it 400. So that's 120,000. New account balance is 181,500. All right, and we just looking for higher highs and higher lows. So it broke this high, went straight across. It did give us a higher low here, gave us a higher low there, gave us a higher low there. So if I looked at this off the first, this was the first time price came under the baseline to give us a higher low. Could I have taken this trade? Yes, I could have. So because that's bullish divergence. Okay. That's that's another 120 pips. So if I just took the 100, and if I divide up that 181 by, let's call it 180 by 200, that'll put me at a $900 pip move, and then I take the 100 pips. That's $90,000 a day. Why am I not phased by the numbers? Because I understand that without the principles, the numbers couldn't be. The numbers are not important. We put a lot of emphasis on the results, and we never think about how to get there. All right. So we got that. That's just that. At the end of the day, we got a high and a high, but we got a high and a low, which is divergence. At the high of the day, at a quote unquote double top. The double top is it's validated when you have divergence. Double bottom is validated when you have convergence. Higher highs and higher lows. In this case, we have divergence at the highs. You have divergence at a high, it's going to go down. How far? Depending on where it is in the setup. But it went down. It did go down. It came here. Gave us a low. Gave us this low. It kind of stayed right there. So if I just try to draw this line straight across, right, I could have really took this trade and got out right there. Even though it's at the end of the day, I could have took this trade and got another 100 pips. So 270 divided by 200 is 1,350. So to keep it a whole number, I'll do $1,400 a pip, and I take that same 100 pips. That's 140,000. New account balance is 411,500. I will draw the 11,500 to keep it even. So the account balance is at 400 grand. This is started from $1,000. Okay. Now we got straight across, but at the same time, from this point, it's divergence. It's bullish divergence. Why is it bullish? Price is still. All these are higher lows. The moving averages are still the way they are, with the slower moving average on the bottom. So, I'm buying. I don't know how high it's gonna go, but I'm buying. 400,000 divided by 200 is a $2,000 pip. $2,000 a pip, and it shoots up like this. Boom. Now this is on a Friday. Boom. Come by Saturday, Sunday, Monday, it's up way up here, which gave us plenty of time. If I go to the 15-minute chart for December 4th, you will see how much time you had. And this is why it's important to check your charts. This is why it's very important to check your charts. So we already up here. Comes here, but the baseline is saying up. Sunday, Monday opens up. You have about 45 minutes to bank on that push. 45 minutes to bank on that push. All right, so boom, higher, comes up, gives you this. So from here to there, that's 1,000 pips. So 2,000 at 1,000, that's $2 million in one trade. $2 million at one trade. Now you at 2,400,000, and this is in December. It amazes me how people say, "Is this the end of the year? I don't trade past November." No, that's your preference. Don't put your preference on me. Ain't no traps when you know what to look for. It's a trap day. It's no. That's not what I'm looking at. That ain't what I'm looking at. All right, now watch this. Even with this, how do you trade this? It's a head and shoulder pattern. Look at this. Even though it's volatile as a mug, it's a bearish divergence going down. Then it comes and give you this. At the same time, hello? Some more bearish divergence for continuation. All right, and this is a crazy day. And then this is how you know the trend. This is a whole trend. It broke up crazy. Stop hunted everybody. Gave you 2 times to take advantage of this move to the downside. Then it comes back and say, you know what? Cool. Y'all ready for this? Trend is set. Good money. Good money. Bottom to the top. We in it now. So I could have came in seeing this. I could have came in, even though I'm up. Okay, let's just say, let's just say, even with the 2,400,000, I keep it going because I greed is. I'm not greedy, but I see what I see. I see bearish divergence twice, right? So I see this come in and say, okay, I'm gonna sell 2,400,000. Divide that by 200. My lot size is 12,000. So let's just say, because I want to be kind of safe, because this is a volatile day, I'll do $10,000 a pip, right? $10,000 a pip, and I come here, it gives me 300 pips. That's 3 million. 3 million. This is all off. This is all off creativity. The most important part of trading is pips, not money. Without pips, you can't make money. So I'm up 5,400,000, and they give me another setup in the same day. Oh yeah, I'm taking that. So 5 million. Let's say 5 million divided by 200 is 25,000 a pip, and I'm getting in. Why not? I'm here. I'm selling for 400 pips. That's another 10. That's a crazy day. $10 million in one day. Over $10 million in one day. That's $15 million in one day. All right. New account balance is 15,400,000. And this is all off knowing what to look for. $1,000 capital in less than 2 weeks, 2 or 3 weeks, from 1,000 to 15 million. And it don't stop showing you that. The thing is that it doesn't stop showing you opportunity after opportunity. Here's one. Watch this. Even with that, right, it gives you that. So I didn't even take this trade, but I see it. Gives you this. Take profits here. Real simple. 180 pips. So 15 million divided by 200 is 75. Let's just call it 80. 80,000 a pip. 8,000 a pip. And you just trade. It gives you a low, a lower low, lower high, lower low. So once it hit 200, you say, no, 200 is good. That's another 16 million. So in the last 4 trades, 16 million, you say, you know what, I'm done for the year. That makes sense. You quit when you were hit. 16 million. That's 31,400,000. And you pull off 1,400,000 just because. Then obviously now when you can't use PayPal or you can't use PayPal or Cash App or a lot of these other options for a bigger pull, so you would need to get a Kraken account. Kraken is probably one of the best accounts to have because it allows for big moves. It's a US based website for trading. But let's say, for instance, you say, well, I'm gonna just use what I got. My Cash App limit is 10,000 a week, so I turn 1,000 into 31 million. I'm gonna pull up 10,000. I can pull up 10,000 a week. That's 40,000 each, 40,000 a month. And I can literally just stop trading and focus on something else. I can go into go into real estate. I can open up a couple businesses. I can help people out. I can do a lot. I can do a whole lot. You know what I'm saying? I can teach people. I can start giving out laptops, whatever. Whatever you want to do, you can do that. And it's all started from knowing bearish divergence and bullish convergence, knowing what to look for, higher highs and higher lows, how they help you to see what's going on, so that this doesn't seem like a foreign language. Because initially it is a foreign language. Without having the insight as to what to look for, it's a foreign language, no doubt. But with that, it's enough for today. I don't know how long I've been on here, but I've been on here for a minute. So hopefully this helps you guys out. Make sure you get you a Kraken account. Kraken, Kraken.com. For the bigger moves, you want to get verified at the highest level. The higher the verification, the more you can do. They allow bank transfers, bank deposits, you name it. But that's all for today. I hope this helps you guys. Please watch it over and over again. If you like what you hear, what you see, please subscribe to my channel. I'll be pasting this stuff to my channel. But that's all for now. You guys have a great day.